Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. Somewhere. America's kind of closed, but we are trading. I see the index futures are trading. I see the dollar index is trading. So that's cool. Pretty much the currency market is alive. And so is the stock indices. And I imagine, let's see, are they trading oil? Looks like they are. There's oil there. So now that seems to need to be fixed because that came down. But we'll straighten that out because it wasn't an up day yesterday, or in the sense of the high was like way up here. It was higher than yesterday. So we'll fix that as time goes on. But right now, we'll go over to the currencies, and let's go back to the dollar index. And there we are. There's the dollar index. And you can see on J4X, you can see just a little bit more red. And I did see a headline. You know, the interpretation is that the Fed, there's a majority now that think they need to slow down the interest rate increases. That's where it is. And that's what we figured they were going to go to. They're not going to stop. They'll probably do the 50% or a half a point, and all the interest rates and all the, in other words, looking at the whole range of interest rates from, 30-day, 60-day, 90, 6 months, 1 year, 2 year, 3 year, so forth. It's really predicting that it's going to top out in the the 475, 450 area, something like that. And that would make sense. It is a lagging indicator. We talk about that here, about lagging and leading indicators, and interest rates are a lagging indicator. What they do is they kind of show you something that's kind of already, it's after the fact. So what we will see probably is we'll see the timetable I gave yesterday will be, and let me get the chat line up. Where is the chat line? There it is right there. And so that will be the combination. That's how it'll all play out.
In the last couple of years,
Oop.
we made Wix websites way faster.
There we go.
Dramatic improvements for COVID vitals.
There we go. And let's find the chat line. There's the chat line. Am I signed in? I bet I am. Let me just say hi. Yep, there's. So I am tuned in. So if anybody else is out there, you can say hi or happy Thanksgiving or do whatever you want to do. Ask a question. Be my guest. There you go. There's Giannis. They're real sloppy. Hey George. Hey Giannis. No, they're just. So in other words, what it comes down to is I think I described. Let me kill that volume too. That's me in the background. What happens is that today, currencies are trading, hedge funds and so forth are looking at if there was any news last night on any of the positions. That's what they like to call them, their positions. So they're like looking at it and they're going, okay, no news of earnings or bad news or good news, so they have nothing to do. And then tomorrow, it'll be the same way, but we're open for 3 or 4 hours, something like 3 hours, I think it is, half a day. And then we shut down at basically noon in Chicago time and 9 o'clock in the morning in Los Angeles. Is it 9 o'clock? 10 o'clock in Los Angeles. We're only open for like a couple hours. And out here, we close at 1 o'clock in the afternoon after opening at 9:30. So what's that, 2.5 hours? 3.5 hours we're open. And so only if there's a necessity to move positions or do something about a position, and a position is the individual product itself. So in other words, if you had a position in currencies, it could mean that you had, British pounds and Canadian and, I don't know, Kiwis and, so forth and so on, yen. And if you needed to adjust your position. George says silver back near 22. Let's take a look and see. I know yesterday it looked really good. It really looked good yesterday. Let's check it out. So they're doing nothing really. Money is paying attention this morning. In other words, different hedge funds and so forth are taking it. They're eyeballing, like I'm able to eyeball my positions and be able to see what's going on. But they'll do nothing unless there is some type of actual input by earnings or bad news or good news, and then they'll try to reach and pick up a little bit. They'll try to buy it in what they call the aftermarket. They call it an aftermarket when it's not the New York during the normal hours. They call it the aftermarket. So, and there is silver, and that doesn't look right. But let me just open it up on another machine. It looks like the let me just do that first. Let me open them up on another machine. But they are up there. Yeah, look at it, 2167. Let's see right there. Let me put it up on J4X. J4X might be a little bit more descriptive today. Let's see, where is it? It goes right there. And there is silver. Yeah, so it's trading at 2164. And let me just put it up on. I go over to the exchange, and the exchange will show me the. Where's it at? The exchange will show me where it's trading on a delay. Where is that? Right there. There we go. It's only 15-minute delay, so that's fine. This way it'll give me the whole picture of the high and low today, because it looks wrong on my charts for some reason. It does that, especially on Thursdays. I have to always clean them up, and I hate that. Okay, so there it is right there. Yeah, so yesterday. Okay, so now look at that. 2 days are screwed up. Interesting. All right, so that's right. That's right. These are all right there, and then this gets wrong. That's wrong. Is that wrong? Let me just double check it. That is 21st. No, it's about right. I guess that'd be all right. Then we have to fix this one, and that'll straighten it out. That'll straighten out our math. So let's do that, and then I'll be able to give you an idea of what I'm seeing through, and we can look at our math and see what's going on. You can see J4X right off. Since it's accurate. See how wide these bars are compared to the 3 on mine right there. You can see, and it's turned the green line through the zero, the dashed line. It's green now for a second day. So you can see that strength, and that's one of the things I use J4X for. Let's see. Yeah, I switched to March. You know what? Let's take a look and see what March is too. Let me see who has bigger open interest. I bet it's getting very close. Let's see, silver at the exchange right now. Yes, no. Yesterday's volume was 10,995. Yeah, but the open interest is way bigger in March. Yesterday, I guess that'd be yesterday's volume. No, that's today's volume. Today's volume is 10,995, and March's volume is 4,000. But open interest on March is 90,000, and open interest on December is only 27,000. So yes, let's do that. Let's make a copy of this, and we'll get both of them up there going. Open, no, not that. There we go. Copy. We'll put March in there. Copy and paste, and let's put March in there. Good point, George. Let's see. Instrument. Let me move this. Let's do this. Let's get this off the page so we can see it. You see it all instead of it being blocking in your face. And then instrument. There it is. There's March. That looks right. Yeah, see, there's yesterday's buy. It went into the buy there yesterday on the March contract. Yeah, and it's trading at 21.84. Cool. And then let's get the weekly in there. Right there. Yeah, and there's the weekly buy. Oh, close. There we go. Let's put that in there. Like that. There's your weekly buy. Interesting. And then let me throw the sell in there too from the last weekly sell. Wasn't that good a weekly sell, was it? There it is right there. And let's put the title of it in there, like so. Is that the right machine? Yeah, that's the right machine. March. Silver. There we are. And let's save that. And there we go. And that's the sell. What was that? That was still a buy from that. That's interesting. They both held on to their buys because it was a red and a green there, so that's cool. And it goes into the sell on that one. And this has to be moved over one. There's the buy. Sells good. That gets moved over one like that there. Interesting. Right at this thing. Matter of fact, which is really cool, is that weekly sell. Oh, that weekly sell right there. Let's use it. Let's use the other machine. There we go. That weekly sell right there. It was in the sell, and it was okay, I guess. We probably lost money on it. Yeah, because if you got short there, it never even got back down to it. We'll have to check what that is, but in the end, is that it gets back into, it gives a volatility and a buy, and keeps you out of this whole thing until it gets into a firm buy area. By the time it gets into the sell again, well, that's not too bad. But then you would have been seeing the fact that the green line is past the zero line and it's playing with the manifold, so there's no way you want to get short in that. You're standing to the side, and then you get into a buy here with this weekly buy, and then you catch that whole ride. So that's not too bad at all. And then this keeps your profits, because that's where it tells you to take your profits right there, and then it gives that down move. I'm not sure if that's right. Let me just double check if that slides more or not. March. Where is that? That's there. Yeah, so that needs to be fixed too. This one right here on this one. Whereas it's funny when you look at the December, because it's the front month at the moment still. You see that it starts off in this area. The high is way higher up, so it protects you on that one. And that's it. Good point, George. Very good. Are you trading March now more than you are trading DEC? Or watching it? Either one doesn't matter to me. That's interesting. Let's save that. Cool. Well, I think we'll start doing that too. I'll start looking at that, and maybe I should send out both of them at the same time. Let's see. Oh no, I don't want to save this at the moment. I want to do this. Cancel. I want to save the whole thing. Like save as. There we go. Yes. Okay, we got March now into the system. Yeah, that makes sense. What are they doing? Let's see. So we got. I saw at one point about an hour ago that the euro was down. Let's see where the euro is. But it would make sense that we still see more strength, because they're doing exactly what we were expecting them to do, and that is interest rate. They're going to start posturing, making motion like as if they are going to slow down the rate increase. That's the Mexican peso. There is the euro right there. Oh, look at that. Euro opened up and is just up a little bit now. Okay. They gapped it up a little bit. It's probably without the Americans around. That's what happens when you lose the liquidity of the United States. Things get more gappy. Things look like the Turkish lira, unfortunately. In the sense of, the illiquidity. So. And that is the action we're seeing here on the marketplace. And there's the euro. Let's see what it looks like on J4X. There's the euro. Looking firm. 2 days a buy. Makes sense to me. Let's put that in there too. There's yesterday. Closed in the daily buy yesterday. There we are. It's in that weekly buy with no problem. So and then with the news that came out yesterday from the Fed minutes, you put that together and you should see firmness. Now I know that we've seen over on the stock indices. We can go over there real quick. There's the S&P 500, and what is that? That's how do we have? No, we gotta fix that one. That's wrong too. Let's see. Let's fix the stock indice. That's the S&P 500. And that's December. And the low is much lower yesterday. So let's fix that. No, that's not where I go. Nope, that's not it. That's not where I go. Cancel. This is where I go. No, that's it. Quote manager. There we go. And CME. There it is right there. Go to the data and straighten that out. Whoa, that's the wrong button. There we go. I just ended up with the tick button. So it's flying, you know. Now, where is the 23rd? Oh, maybe if I change time on it. Let's see if I do that and that'll straighten it out. Let's cancel that and move it out of the way. And you'll see the action. There we go. Settings. Let's see if that does it. Yeah, there you go. Now it's straightened out. Now we just have to move that over. There we are. So you can see, yeah, it's looking good. It's trying to take off. You know, yesterday when I was trading it, it was like they took out the 40s in the late afternoons. Matter of fact, you can see here when we go to the longer term. But yeah, that would make sense. There's a few traders, you know, that I traded with. They think the market has put a bottom in. They don't think they're going to they're not going to give institutions an opportunity to get in. They think that, in other words, there's not going to be another sell-off unless there's some type of major bad news that comes out. Major bad news. Some of the traders I know, you know, that have been trading like me for 40 some odd years think the bottom is in. I never really think about it that way. Once in a while I do. But I just like to follow my math more. And so I try not to, you know, as far as I'm concerned, the bottom is always in, especially when you're using marrying options with things. So it doesn't really matter if the stock market drops, you know, if the S&Ps drop 1,000 points, it has closely no effect on me, because I always have a put underneath or a put spread on, or have something that will give me assets, and I'm sure to call way up higher, you know, 3 to 4 months out, and it's decaying away like a bond in my favor, and then having the underlying assets. So to me, I'm always marrying a put option or put spread, or I put butterflies on. I do all kinds of things to give me, you know, opportunity on the downside. So it depends on what the weeklies and not the dailies as much, but what the weeklies do mainly. So I'm not really always looking for the bottom or the top, since I'm always prepared for the bottom or the top. It's a whole different thing. It's just a more sophisticated way of trading. It's like trading in the 21st century, not trying to trade like the early part of the 20th century with Graham and Dobbs and you know, so forth. And for a lot of you out there that may not know it, Warren Buffett trades the same way, but he doesn't do it exactly. He doesn't do the puts with me. He just does the calls. He's always out there selling calls, or if he wants to buy something, he'll sell puts. So it's really surprising that he doesn't make much money at all. I'm really surprised. I mean, he basically beats or is right around or a loss a little around the S&P 500. He doesn't do well at all for someone that uses options. I'm really surprised. He doesn't use them right. But that's the way it goes. And then once in a while, he does do something right. Like I remember one time he bought Apple calls with an earnings coming out. He bought like 3 months. They were anticipating a major move in Apple over a 6 month period. He had like 9 month calls or something like that. Matter of fact, I think it was one of his famous trades. It's always funny how he has famous trades, and it's like, why are they famous? But the media talks about how famous they are, And it was the collapse of 2008. He bought tons of big option positions when the world financial system collapsed. He bought tons of like Goldman Sachs calls and Apple calls, and the stocks like went up like 50% or something like that. So he had some good winning, but his overall portfolio was beat up because he was so long without puts protecting them. So he needs to have some of those good famous wins because it keeps him like you never hear that he has like a sophisticated options trader, like 150 250% a year. He always has like 26% a year or 23% a year gains, almost matching the S&P 500. It's almost like he pick and chooses not to look any better than what the market is. It's almost like he holds himself back because he seems to understand the options market. But I've seen other well-known investors like him. They have a general grasp of the option market, but they don't really have a full grasp of the market. It's interesting. All right. In other words, if Warren Buffett was playing with silver and gold, more than likely, I would assume when silver... Let's go back to silver for a second. Where's silver at? Right there. I would assume that... and I can tell you another famous trader that does do those things. Paul Jones. Paul Tudor Jones. He does that. The media will tell you how he's long or short, 5,000 oil futures or gold futures or something. And what happens is that he's also short like the calls above, and he's also long the puts below. And they never mention the option position. They always mention just a third of the position. So but if the Buffett style would be that with silver down in the low 17s, back 3 months ago, chances are he might have bought 5,000 or 6,000 calls that are like 9 months old. The options would last for 9 months. That's his style. He likes to step up when everybody is running away, and he likes to buy like 1 year calls, and 9 month calls, and things like that. Matter of fact, I remember when he did it, he bought the Goldman Sachs calls. Goldman Sachs bought them back from him directly. Because he could exercise the calls and have the stock, and they didn't want... He had like, I don't know, I think he had like 5% of their stock or some crazy number. He was like very close to having to declare that he had when you own 7% of a company in the United States, you have to actually file a report to the Securities Exchange Commission. And so Goldman Sachs actually went directly to him and said, look, we know you have these options, and we give you 6% of our company. We'll buy them directly from you. And they did. So he went and exercised and take care of it. And he was probably happy because then he doesn't have to go through all the millions of dollars of paperwork. A combination of both of it. So, but yeah, it would be like him buying calls down here or something like that after, silver coming down from, say, let's do it on J4X, because J4X has a good way of describing past prices better. Where's it at? Let's go to, there's silver, and let's put the weekly in there like so. There's the weekly. So, like it wouldn't have surprised me if someone found out that he had bought calls, after, let's say, this big collapse from the $30 area down to like 17, almost a 50% drop. Wouldn't surprise me if he bought like 5,000 calls and just didn't even mention it to anybody. And since it was probably calls, the media won't even cover it. It's very rare. So that is the name of the game there, using the options against with things in different ways. All right, from there we're just looking at the euro, so let's take a look at the euro again, and we'll go over to the British pound from there, and let's put. Let's see, where's it at? There's the euro on the weekly. Obviously, no problem there. The euro is cleanly in its weekly buy. You'll see it here in a second on J4X. Looking very happy. And let's see what the cable looks like this morning. There's cable. And we'll put it up over here too. And there it is there, marching along very fine. 3 days in a buy there, compared to 2 days of the euro. And move that line back down like that. There it is. And you can see, no problem. Another good, strong weekly because, this should be relatively dead here unless there's some major, major news. Matter of fact, on Friday in the morning, because of the report, the funds across the planet are having their meetings right now. They had their meetings last night, or maybe not. They might have been out the door shopping already and getting prepared for the holiday. But more than likely, Friday morning, the funds will be talking about the report from the Federal Reserve, and they may step up. They could step up and start buying pretty harshly, aggressively on the equity market, because they say that the institutions overall, the hedge funds and so forth, are not really that long. They're long, but they're under invested. They've been waiting for another shoe to drop, as they would say. They're waiting for the market to back off one more time because they're all counting on that recession to occur somewhere in the middle of next year. So that automatically in the financial manifesto of a lot of funds, if they're in a recession, they have to liquidate assets, or they have to adjust their assets. Let's put it that way. So they may be dragging their feet and just, as they would say, nibbling, but they're not taking big bites of the market. And like I said, some of the professionals that I know that run funds that are like the same skill set that I have are basically saying, we're stepping up. We've been stepping up. We think it's bottom. So the worst case scenario is that when it starts to look a little saggy, they can just go out anyway and just buy puts and sell calls against it anyway. So it has no real effect. But at least they don't have to chase the stock. That's the real challenge right there. When you're trying to chase a stock and you need to have, 1 million shares or 2 million shares in your portfolio to keep it balanced, in these thin times, it can be very challenging. Next thing you know, you're paying 20 and 30 cents more than you should be, and that 20 or 30 cents is out of your pocket, really, in the end. If you don't buy smart, just like if you don't sell smart, you end up giving money away. Does that all make sense? Have I made any sense? I'll just make sure I'm making sense. Happy Tea Day. I like that. That's a good one, George. Happy Turkey Day to you. Let's see. Let's go over to the Swiss. Yeah, Swiss seems. Oh, I heard yesterday. Credit Suisse again. Credit Suisse is. I guess they put out their quarterly report, and they lost more money in investors, not like lost money like in trading or something like that, but sophisticated money in their private side is backing out. They're selling they're liquidating and moving their positions and moving their equity away from Credit Suisse. So that's what I'm figuring. We've been seeing the Federal Reserve do the swaps to the Central Bank of Switzerland. This way, the Central Bank of Switzerland is probably helping out Credit Suisse. I mean, that's probably the name of the game. I doubt that it isn't. I mean, we know that's the name of the game of, quantitative easing. That's what it's all about. Keeping stability. Keeping the same people in charge so they don't lose their job even when they don't know what they're doing. It's a strange philosophy, but that's what they're doing. All right, and let's see what Swiss looks like over in J4X right there. There it is right there. And there's the daily Just marching. Is that? Oh, that's the weekly. Marching down, just like the same way we're marching down over in here. And then right there, let's get the daily in there. A couple days of red. Yep, 2 days of red. Same gig. And where did our red start? Was that it? Is that a minus or a plus? That's a plus. So it went into the sell yesterday. No, not there. Right there. So there's the classic pressure on that product. But yeah, Credit Suisse seems to be slowly being dissolved on some level or another. I wonder. I guess they'll clean it all up and probably try to merge it. The Swiss will try to help it get merged, or it'll maybe DocDow will buy it. They'll go down that much. DocDow will be able to afford to buy Credit Suisse. Because it does sound like it's in the hole. They've done something wrong, that's for sure. All right, investment-wise. Now, I guess they're trapped in the swap situation or something. Who knows? All right, from there we jump over to the yen. There's the yen. A couple days in a sell. Put it up over here. There 2 days in a sell. Also, it is funny how Swiss and yen march along together so well. And then, let's see what else we got going on here. So the yen there, and the weekly, the 3 full weeks and the weekly sell with no problem. And I bet it's like 4 over here on J4X. Right there. There we go. Yeah. There it is, like that. Cool. And that pressure is down. Let's see. Again, if this is like the top, in the sense of the interpretation of the market, that this is the top of the interest rates, everybody's talking about a recession in the middle of next year. But what if Congress does? What if the Republicans do what Mrs. Pelosi did, what the Democrats did with the House? In other words, I've already heard they're not putting what they call senior Democrats into positions on committees. They're offering it to newer Democrats, and without those senior Democrats, matter of fact, the whole senior leadership has stepped down in the House of Representatives. So they don't even want to participate anymore. They're just going to sit there and just collect a paycheck. They're not going to be involved, and so the Republicans may just stop all the spending. And if all the spending stops, then the economy grows. I mean, that's really the recipe of it all. And they're going to try to, open up the spigots of drilling again, and where we become the world's producer of oil again, majority producer. And so, if those things occur, let me tell you this one. This is very interesting. The last 2 years now, because it's still Trump's policies on the economic side in taxation and so forth, that the U.S. government is taking in record amounts of tax money without touching the interest rate structure. So in other words, I don't know what these Democrats got their boneheaded ideas in their head, but and the end result is that they're collecting more money than ever before in the history of America in taxes because of the growth that Trump set up. So there's a lot potential there. In other words, what I'm trying to insinuate is that there's a good chance that we don't get into a deep recession whatsoever in the middle of next year. In other words, it could literally be like just flat. And then those stock funds, the hedge funds and mutual funds and so forth, are even in more desperation to have a bigger position, and they've got to buy even more in the sense of they they needed to be fully invested when they're not fully invested right now. So that, don't be too surprised if you start to see a stock market that's firming up out of nowhere and not letting go anymore, especially with the win of the Republicans of the House. And then on December 6th, if the Republicans win the Republican seat in Georgia, then that really could put a lot of energy into the U.S. stock market, which then puts a lot of energy into the world stock market. So it's we're at a very crossroads situation. We're only 12 days away from the election. So all right, from there. Oh, and I understand that the Republicans are doing exactly what the Democrats did for a change. They're going door to door and they're collecting up votes, early voting, the whole bit. They're doing the same early voting as the Democrats are. So it could be a 3 or 4%. It could be a 2 or 3% win easily. Wouldn't surprise me if Walker wins by like 3%. Wouldn't surprise me at all. And the markets may be seeing that. All right. From there, we drift over to our currency laboratory. We look at the Turkish lira, which is like we go to school on that all the time, see the different things it's doing. There's dollar Turkish lira right there. You see it's trying to get up to the zero line. You can see right there it's still minus. The weekly, obviously we can erase that. It's not going to change any. It's going to close in a weekly sell at this point. So 42 weeks was it. It was fun. Well, it lasted. Let's put it up over on J4X. There it is right there. That's the weekly on J4X. And it's still in the weekly there. Well, it'll probably start to turn red Monday or something like that, or maybe tomorrow start to dial it down somewhere along the line. And matter of fact, I think I'll put the little circly thing in there that we usually put in there for weeklies. Oh, somehow or another I screwed that up. Started at the wrong spot. Let's try that again. Grab it there and move it over. There it is. Right. No, not that. Cancel. There it is. And that's pretty close. No. Let's try it one more time. Whoa, what did I do there? There it is. There we go. There it is. Through the zero line. It's going minus. Let's put a little line in there for the fun of it. And let's make that dashed or something like that. There we go. So there's the pressure on the weekly. After 42 weeks in a buy, looks like it's going to be in a sell. Let's save that. Save it. Save workspace. There we are. And save as. Ta-da! And then from there, where do we go from there? Where's that? Oh, there's that moose. And from there, yes. And then from there, we slide over to the location, as I like to say. There's the euro. It's looking pretty good, actually. Pretty firm. And it's the second day in a buy. And it's in a weekly buy with no problem. Interesting how that the dollar Turkish lira is definitely underperforming the other. Let's see. Let's slide down. Oh, and let me just show you the daily to that too. There's the daily of the dollar one. And that's still lifting up. Where are we at again? Let me go back over to it. We've been in the daily Is that right? Yeah. Let me go back to it. Right there. I guess J4X will start to catch up. We've been in a daily sell since here. All week long, basically. It'll start to catch up by tomorrow, probably. And let's get over to a daily Turkish lira. Right there. See, it's matched up with Chicago. In the buy, moving. And the whole bit there. And then you can see, when we go over and take a look at it on a weekly basis, like so, right there. That's the action. Ooh. Let's see. And then from there, so that's I guess that's the whole story when it comes to Turkish lira. We really don't get a lot of news on it. It's been relatively confusing in some aspects, I really wish we saw more news on Turkish lira and seen what their government policies are. Because I think we'd have a better understanding of why we're seeing what we're seeing. I haven't heard anything about those free puts. I would imagine that the government reneged on it. That's the only thing I can figure. They were giving out free puts. That was what the declaration was last February. Was it last February? Yeah, last February. No, last December. At December 31st. They started to give out free puts. And that made it easy for investors to be invested in Turkish lira. They would compensate whatever you paid for your Turkish lira. If it went the wrong way, you got it. They would give you the difference, so you couldn't lose money by buying their currency. And so that was really the best thing of all. That's instead of them exhausting all the money they have throughout the years to prop it up, just instead of buying the whole currency, just let the investors take the bulk of the cost, and you just give them a little taste, a little slice, So now from there we jump over to the CAD. There's the CAD. You see it's the second day in a sell. And it's in a weekly sell right there. And there's a weekly sell right there. And there's the daily sell right there. And then let's put it up over here. Right there. There we are. We'll see that all the red for the weekly right there matching up with that there. That's good. And then let's put the daily in there. And there it is, rolling over like ours. Right there. You got the two reds. You got the green line piercing down. So all good in the hood. And then, oh, there goes the mouses. There we are. There we go. Let me grab that mouse. That dropped. Both of them dropped. Okay, cool. So that one is right there. Oh, it's tangled. That's what it is. Nope, it's even more tangled now. Alrighty, now from there, what else we got going on there? From the CAD, we go and look at the oil market, see what the oil market is doing. So we got CAD on Chicago, so let's go take oil market and put it on J4X right there. There's like Texas Sweet Crude. So as oil is going down in value, CAD should be moving back up, and we're not doing that. That's kind of interesting. Now let's put oil over here and take a peek. Right there. There's the front month. And it kind of, something seems wrong about that. Let's fix that. Move that off the screen and fix it. Come on, you can move. Why are we having a problem moving that? Oh, I see why. Okay. There we go. Let's see if we can fix that so it makes some sense and looks like J4X. Let's do that right there. There. Is that right? I think that's missing a day. So that's no good. Let's try this. Let's do the direct exchange price instead of the broad price. Was it NYMEX Electronics? There it is. Prices. It still seems odd. Is that missing a day? No, that's right, I guess. Let's see. Let's double check it from the exchange. Let's see. Where is it at? Right there. Right there. And there is the Jan contract. Okay, so yesterday, the 23rd. Where's the 23rd? That's the 22nd. Where's the 23rd? There's the 24th. We're missing a day. So, all right, let's see if we can straighten that out. Let's try this one more time. So we get a better idea of what's going on with the oil market. But obviously, J4X is showing us the 77.64, and we're seeing the same thing over here. So at least we know that's there. But we're not challenging some type of daily buy, that's for sure. We're missing a day in there. So let's do this file. There. There we go. And go to NYMEX and Jan and edit it. Load. Alright, there we go. Do this. So there's the 23rd. Let's put that in there. Alright. You'll see it pop up in a second. And we'll get a better read for the product. But it is a little surprising that Canadian is not moving up. There we are. And the settlement yesterday was 77.94. There it is. Okay. Let's see how this plays out now. There we go. And we'll format it. There we go. That's the way it looks. That's the way it's supposed to look. Exactly. Yeah, we've been in that cell. You can see here for 2, 4, 6 days now we've been on the cell. And over here it's been 2. There's 6. There's 1, 2, 3, 4, 5, 6, and then 1, 2. So 6. 8 out of 9 days it's been in the cell over here on J4X. 3, 6, and then a green, and then that. And you can see the green line. Well, it hasn't been able to get into the cell because the green line's been above the dashed line. So you just knew it was a neutral on looking it through the J4X Manhattan thing. And you saw the downward pressure and all, but you weren't sure yet when the shoe is going to drop and it's going to try to lift. Over here we've been, let's just put this up on the weekly too. I'm sure it's been minus, so you wouldn't have tried to get any long it, of course. See, it's been in the cell for a couple of weeks, pushing down. Oh, speaking of which, did everybody see that? You know that fellow from FTX? Supposedly he's speaking at a conference. They're all confused why he's not locked up in handcuffs. But he's speaking with, like Yellen is there, and he's there speaking, and even the president of Ukraine is there. It's very strange. They're all the headlines over here in the States this morning is, why isn't he not in handcuffs? Make him do his what is it? We'll do whatever lecture he's giving in handcuffs. Isn't it the strangest things? Oh my God! All right, and so there's the crude compared to the Canadian. You know, it's a so let's just put Canadian here. You can see, well, crude was up. You can see it there. It was up and it's down price wise, but overall it's in a sell, and we are at the lows of the last bunch of weeks. You know, I mean, like let's scrunch that up a little bit, but we've been in a sell for a while. Oh no, cancel. Where's that mouse? Cancel. There it is. So right there, you know, we haven't been this low since September. So yes, a couple of days ago they made a low that challenged the September low, right there. So we're kind of surprised. It's kind of impressive. I guess that means this is, you know, we talked about the inflation and the interest rates, how they affect pairs trades, you know, and obviously it's having an effect on the Canadian pairs trade against the dollar. I mean, you would think it would have a reverse effect, really. We saw this lifting up as oil was dropping, and now all of a sudden it's just sideways. Maybe it's the holiday. Maybe it's the fact that the Fed now is kind of peaked out in generality of where, like, we have a good idea now. I mean, I've been saying where I thought it was going to peak out, and it's obviously now being more confirmed by the Fed itself. You know, there's more governors and presidents in the Fed, the voting ones, who are saying, well, we've pushed as hard as we really should. We should dial it back a little bit. Not lower rates, but just make the increases less. You know, 0.5%, then 0.25%, and then nothing. So now markets are looking for maybe 3/4 total and then a stop altogether. And that's exactly what the bond curve looks like. It's telling us, and I've been saying this here, and that's why we've been labeling webinars as interest rates and this and interest rates and that, and because the curve is trying to tell us that they believe that the market is, you know, the Fed is going to slow down its increasing in interest rates. So we probably only have like 3/4 left to go. Let's see. From there, we go over to the gold. Let's look at gold. We'll put gold up on J4X. There's gold. And gold, I imagine, is finally moving up. It was in a daily sell yesterday. Let's see what it looks like today. Okay, so they got it's in a daily. Well, that's the weekly. Okay, that makes sense. Let's see what the daily looks like. There we go. Yeah, and it's starting to turn into a buy there today. So let's take a look at the South African Rand on J4X on Chicago Quant. Right there. So yeah, see that nice dip. Remember I said that. Matter of fact, that's what we talked about yesterday. Now I just remembered. Remember in the webinar I said that South African Rand is moving down, and it's screaming at us that gold is going up. You know, it's telling us they're not selling gold as much as we've seen it. There it is right there. Yeah. So in other words, exactly. And it didn't close in a buy yesterday. Let's just double check. It missed it by the hair of its chinny chin at not even $1 under. It was minus 0.37, and the green was minus 0.73. And then today you can see it's plus $7.47 to green. You can see it right there. So, you know, we said that yesterday because South African Rand does a much better job than the Canadian in predicting the commodity. So, I mean, Canada and oil are very good, but it's nowhere near what the South African Rand and gold is. And so we're seeing that nice pop there and a nice rebound yesterday. Especially, again, after the Fed numbers came out, the Fed meeting numbers came out with 2 hours left in the U.S. market. I wonder if we put a intraday chart up of it, you will see at the 2 o'clock point. Let's play with that. We're going to go play with that. So we're going to make a copy of, I guess we could do it simplistically. So we're going to make a copy of one of these and just turn it into a minute chart. We'll throw it up on the screen. And we'll look at when they announced the Fed minutes. Paste. There we go. And let's make that the whole page. And let's put the gold in there. Let's see, where's it at? Instrument. There we go. And what's that? GL? Or GC? I think it's GC. There we go. Oh, that's interesting. I think I should make it a minute chart. Oh no, look at that. It's filling in. That's right, because there's no weekly to it. That's right. Let me just double check something. I just saw something in there that confused me. There's two products? No, okay, there's one. Okay, good. There it is. So that's interesting. So there was at 2/3 of a Tesla, and let's go back to yesterday, to 2 o'clock when the Fed came out and released its minutes. So that would be right here. There it is. I'm going to put a line in there. So gold was trading, and let's make it like a white line or a yellow line or something like that. Let's make it yellow. So gold was trading at, don't mean to be lifting anything. Where is it at? Right there. Gold was trading at 1744. The news comes out right there. And let's see, what is that? Right there. That is 2 minutes later, it's trading at a high of 17.5049. So it jumps $10 in 3 minutes, and then starts to build a base. And let's see what it's done. Yeah, it's been hanging out up there. And you can see the math does a fine job. I don't really trade gold. I rarely do anymore. But the math is always, it's always good to be able to see the math do its job, And that's really cool there. There's an intraday, like I said, it's a 2/3 Tesla intraday trading tool. So it goes into the sell there. You get the red and green warning. You get two red and green warnings here for this little bottom here where it goes from 54 to 58, makes almost a $4 move. And then you get a no warning here. It just goes red. And then there's your break right there. There's your sell. And it drops, what is that, from 56 down to 52.5 maybe. Another win. Here's a warning that there's something coming right there. It gives you the buy signal even there. And you go from 54 to 58. You get another $4 winner. Winner, winner, chicken dinners. And then there's your sell. And there you are right there. It's been in the sell since right there. I guess it's like right there. It's been in the sell since that one right there. And you got a warning. A couple warnings. And then it breaks and keeps on and tries to lift and fails again. And it's still in the sell anyway, so it doesn't matter. And so it drops from 58 now down to 56. Now we're getting a warning again. So that's the beauty of seeing Doc's webinar live. We take a product that we haven't seen and we put it up there blindly from just Doc rambling about ideas. And the next thing you know, or you could be rambling about ideas and we'll go look at it. And then there you can see the math, how good the math works. So that is that. All right, traders, it's time for me to go do something Turkey Day like. So we will catch you all tomorrow, same time, same channel. So this is Doc from North America saying have a safe and smart trading day. And we will talk to you tomorrow. So happy trails to you until we meet again, which will be TGIF. Happy trails to you, to all our trading friends. Later, later, traders.